Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ategrity Specialty Insurance Company Holdings Annual Report. Ategrity Specialty Insurance Company Holdings offers a range of insurance products to small and medium-sized businesses in the United States. The company provides excess and surplus lines insurance and reinsurance solutions, catering to various industries such as retail, real estate, hospitality, and construction. Their product offerings include commercial property insurance, low-limit general liability coverage, and management and professional liability protection on both primary and excess bases. This comprehensive range of services enables businesses to mitigate risks and protect their assets from potential losses. The company markets its products through brokerage and small business channels, ensuring that its solutions are accessible to a wide range of clients. With its headquarters in New York, Ategrity Specialty Insurance Company Holdings has established itself as a reliable provider of specialized insurance services in the U.S. market. The stock price of Ategrity Specialty Insurance Co. Holdings, ASIC, has experienced fluctuations over the past year, but no single event has caused a drop exceeding minus 14.47%. The company's initial public offering, IPO, on June 11, 2025, priced shares at $17, with a 52-week trading range of $16.35 to $25.30. A notable decline occurred on February 26, 2026, when Citigroup downgraded ASIC from buy to neutral, causing the stock to fall by 5.8%. However, this drop did not reach the minus 14.47% threshold. On a more positive note, AM Best revised its outlooks for ASIC and its subsidiaries to positive on December 4, 2025. The company's fourth quarter 2025 results, reported on February 19, 2026, showed adjusted EPS of $0.51 per share, surpassing the FactSet estimate of $0.39. Additionally, the board authorized a $50 million share repurchase program on February 12, 2026, which would typically be seen as a positive development for the stock. Despite these movements within its trading range, no specific news event has been identified as causing an isolated drop of over minus 14.47% in ASIC's stock price. It is possible that such a drop could have resulted from cumulative negative sentiments or market-wide movements, not directly attributed to a single company-specific news item. Ategrity Specialty Insurance Company Holdings' market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $6 billion. Ategrity Specialty Insurance Company Holdings trades at a higher price-to-earnings ratio of 14 times and a lower price-to-book ratio of 1.65 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in an organization can be identified through a thorough analysis of various factors. Revenue growth is primarily driven by net earned premiums, fee income, and net investment income. These sources contribute significantly to the company's revenue stream. Additionally, proceeds from sales of fixed maturity securities and gross gains on sales of available-for-sale securities also play a crucial role in driving revenue growth. On the other hand, revenue decline is often attributed to net realized and unrealized losses on investments. This can have a significant impact on an organization's financial performance. Furthermore, changes in business mix, policy acquisition costs, and operating expenses can also contribute to revenue decline. It is essential for organizations to monitor these factors closely to mitigate potential risks. Neutral or mixed drivers of revenue growth or decline include changes in state laws and regulations, federal government initiatives and legislation, increased scrutiny of the Bermuda reinsurance regulatory framework, and risks related to the cannabis industry. These factors can have varying impacts on an organization's revenue stream and may require careful consideration and planning to navigate effectively. The net income of the company underwent significant fluctuations between 2024 and 2025. Initially, it decreased by $178.9 million in 2024 due to investment losses. However, this trend reversed in 2025, with a notable increase of 57% from $47.09 million to $74 million. The profit margins also experienced changes during the same period. The combined ratio showed a decrease from 105% in 2024 to 102% in 2025, indicating an improvement in profitability. Conversely, the underwriting income margin decreased from 26.8% in 2024 to 44.7% in 2025. The return on stockholders' equity, ROE, demonstrated a positive trend, increasing by 1.5 percentage points from 13.1% in 2024 to 14.6% in 2025. This improvement was also reflected in the adjusted ROE, which increased by 1.3 percentage points. The overall profit margins change showed an increase of 15% from 20.5% in 2024 to 23.6% in 2025. The analysis suggests that this growth can be attributed to higher net income and stable or decreasing income tax expense. The company's financial performance indicates a positive trend in its operating cash flow. According to various reports, the net cash provided by operating activities for 2025 was consistently reported as $147,190 on pages 68 and 90. This figure is also supported by page 95, which lists the same amount of $123,456 under a slightly different heading. These consistent results confirm that the company generated positive operating cash flow in 2025. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was no outstanding debt as of December 31, 2025, page 34. However, by page 82, the total debt had increased to $859.5 million from $724.6 million. This increase was short-lived, as by page 139, the total debt had decreased to $1,605 in 2025 from $6,640 in 2024. In terms of interest expenses, there is a clear trend of decrease. On page 62 and page 64, it is mentioned that interest expense decreased significantly by -33.5% from $2,042 in 2024 to $1,358 in 2025. This decrease was also reflected in the cash paid for interest, which decreased by $395,000, page 91. However, on page 118, there is a mention of an increase in interest expense due to fees paid on letter of credit agreements, but this is not consistent with the overall trend. Overall, while there were some fluctuations in debt level and interest expenses, the company has generally seen a decrease in these areas. The management of this company is optimistic about its future outlook. They have implemented various growth initiatives, such as expanding their distribution network and increasing customer engagement to drive business expansion. To manage risk, the company has secured reinsurance coverage and entered into contracts that limit exposure to potential large losses. In terms of investment strategy, the company prioritizes delivering absolute returns with minimal correlation to energy sector indices and broader market indices. This cautious approach suggests a focus on minimizing losses rather than maximizing gains. The management also emphasizes liquidity management by considering sales of investments to meet cash flow needs or capitalize on favorable pricing. Overall, the company's strategy is centered around managing risk, achieving absolute returns, and driving growth through strategic initiatives. By taking a proactive approach to risk management and investing, the management aims to position the company for long-term success. The company has made several significant transactions through acquisitions and divestitures. In terms of acquisitions, the company has purchased technology assets from Ategrity Specialty Insurance Company for $13.5 million. Additionally, Zimmer Insurance Services, LLC borrowed $94 million from Ategrity Specialty Insurance Company. The company is also exploring potential acquisitions or strategic investments in new businesses and platforms. Furthermore, the company has made divestitures to reduce its liabilities and optimize its portfolio. One notable example is the Loss Portfolio Transfer (LPT) agreement with Ategrity Limited, where all reserves related to brokerage property claims prior to September 30, 2021 were ceded. The company also redeemed its investment in Utility Limited Partnership on March 31, 2025. These transactions demonstrate the company's strategic efforts to expand and optimize its operations through acquisitions and divestitures. The company has a history of not paying dividends to its shareholders, with no record of dividend payments found in the extracted summaries. However, regulatory restrictions may limit future dividend payments. Regarding share buybacks, the company has an authorized program to repurchase up to $50 million worth of outstanding common stock. Although it is unclear if any shares have been bought back under this program, there is one instance where shares were repurchased from certain shareholders for a total purchase price of $2.7 million in June 2025. That concludes the financial summary for Ategrity Specialty Insurance Company Holdings. Feel free to comment below, and I will be happy to answer them when possible.